Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Streamline Capital. Excited for today's show. We got Nicholas DiLeone with us today. So, Nicholas, how's it going today? And welcome to the show.
Going well. Thanks for having me, Brian.
Awesome. Well, do us a favor. Tell us a little bit about yourself and, kind of weave a tale and tell us, where you came from and how you got into multifamily.
Yeah. So I'm originally from kind of New York City area. Lived there for most of my life. Met my wife there. We wanted to try out California, so we moved out to California. Lived there for 4 years and then moved to Texas.
Mhm.
When I was in New York, I worked for a big institutional real estate investor called Leone Real Estate, TI Craft. Worked there for 15 years. Then I worked for a value-add industrial shop out in San Francisco. 2 years headed up asset management, and then moved to Texas and kind of started up my syndication business right after COVID. So I got let go from those two jobs. COVID started a month after we moved to Texas, and we're like, okay, let's just start this thing up. So that's
Yeah.
kind of when we started.
Awesome. So you were in commercial real estate working for other people, and then get laid off, and you're like, I can do this, essentially.
Yeah, I mean, I started to listen to podcasts like
Mhm.
yours,
Mhm.
and figure out like I could do this myself,
Yeah.
joined a mastermind. Masterminds are super, super important, getting a
Mhm.
coach. And even with my experience, like I'm really good at asset management, but I have this blind spot with acquisitions. I need to learn that piece.
Yeah.
So that's
Yeah.
kind of what the masterminds allowed me to do.
Awesome. Awesome. Let's talk about like the transition. I mean, working for somebody else versus, going out alone and building your own business. What were some of the biggest challenges you faced, kind of going through that transitional phase?
Yeah. So, I mean, coming out, I needed to be humbled a little bit,
Mhm.
So I came from this institutional world. I was like, I'm going to do this all myself. I'm going to buy like a small 10, 15 unit multifamily myself. And kind of joining the mastermind, you kind of realize that real estate's a team sport. It's very kind of cliche to put it out there, but it's true. I had blind spots, and you want to fill up your team with people that can fill
Mhm.
those blind spots. So that's kind of part of it. When you're running your own business, there's all the pressure's on you. If you don't succeed, it's on you. You have to take full responsibility. So that's always a challenge. And I always kind of have my wife in the background, like, you might have to go back to get a W-2 job. Like, you're not getting any deals. Like, how are we going to make this work? And we
Mhm.
just consistently made progress every single day, little progress every single day, and
Yeah.
finally got our first deal in 2021 after kind of doing it for about over a year. It took a
Mhm.
while to get it.
Yeah. Okay, so over a year to get the first deal, and I think I know the answer to this, but I'll still ask it anyway. I mean, that first deal, did that completely, fund lifestyle and everything else, or did you have to keep on
No.
going?
Yeah, you got to
Yeah.
keep on going. I mean, there's definitely a myth out there like, hey, look, you can live off the cash flow of doing a few
Mhm.
deals. It's really where you create wealth is liquidity events, right? So private
Mhm.
equity liquidity events, selling the real estate, and then churning those into new deals. That's kind of, someone talked
Yeah.
about the kind of conveyor belt model, right? So you have that conveyor belt model, you put these assets on the
Mhm.
conveyor belt. When they come off the conveyor belt, you get a liquidity event. That's where you really build the wealth.
Yeah. Yeah, I like that idea, the conveyor belt. I mean, I have a similar way of saying it. Every project that I do as a general partnership, I get 2 paydays.
Mm.
Acquisition fee on the front end, and then when you take it off that conveyor belt, you get that liquidity event on the back end. And the way I've been doing it is, using the acquisition fee to fund the business and pay living expenses. And then when they come off the conveyor belt, that money gets invested, that gets reinvested. But, kind of like you said, it doesn't take, your first deal is not gonna, it gets you into the game, but it's by itself not gonna, set you up financially. But gotta keep on going, keep on doing more and more deals. That's part of the fun too. So talk a little bit about the first deal you got into.
Yeah. So we were looking in DFW. I'm in Dallas, Texas now, and it's a super competitive market at the time that we started looking. Warren got a lot of deals done. I had my little wife, Birdie, kind of in my ear, like, hey,
Yep.
we might have to get a W-2 if you don't get a deal. So we started looking outside of the DFW area. So we looked at El Paso, Texas. Texas is really big. El Paso, Waco, and then we got this first deal in Waco. It was 120 units. C-class, built in 1972. And it was interesting because at the time, everyone wanted value add. It's like, hey, I
Mm-hmm.
want all the units non-renovated, renovate the units, flip it. We had a lot of syndication people pass on this particular deal because a lot of the units were renovated.
Mhm.
And, me and my partner, we came from an institutional background. We saw that rents were under market, expenses
Mhm.
were bloated, they weren't protesting taxes. So there weren't a lot of people bidding on this deal because it wasn't deep value add. We ended up going full cycle on the deal and crushing it. We got a 23% IRR,
Nice.
1.7 equity multiple a few months ago. And it was just kind of slow and steady asset management play. It
Yeah.
was valuation through operation.
Now, was this everybody's first deal on the team, or did you partner with some people with a little bit more experience?
I would say I've done other deals where I've been a GP, capital raising, kind of advisory asset management. So this was kind of our first real deal where we're like doing everything on the
Mhm.
property management calls, going down to the
Okay.
property, kind of all the stuff that I used to do at my other
Mhm.
job. But like, this is our own money. We put a lot of our own money into the deal to kind of show that we believe in the deal. So we're all kind of like learning the details of this piece
Mhm.
together.
Nice, nice. And I mean, something that I've reflected on a lot is what's the best thing for the first deal? And something I'm going to throw out there, I just want your thoughts on it. But I mean, you do have a lot of asset management experience, so you might be the opposite of what I'm saying. But I think for the first deal, it kind of makes sense to go for something like that that doesn't have a heavy value add, that has, maybe, three-quarters of the units renovated, so you're not biting off more than you can chew. What do you think about that?
I think it's a good way to approach it, right? Like
Mhm.
instead of going big, hit a double or a single,
Yeah.
and it just kind of lowers the risk. So you can kind of learn the operations, learn the asset management, and the stuff is not complicated. None of this is rocket science, but there is a process to it. You always protest taxes, you always bid out the insurance. So I think that's a really good way to do it. And kind of through that craze and excitement of 2021, 2022, everyone's kind of overpaying, astronomical prices, floating rate bridge debt. Everyone wants that big value add, that kind of grand
Mhm.
slam. And
Yeah.
people are doing it when the market's going up. But once it starts going down, it turns and interest
Mhm.
rates triple, then it doesn't work, right? So I think that's a really great strategy.
Interestingly enough, I did this more based on what was available on the market, but when I pivoted and started buying deals in Salt Lake, the first one we did was a fully renovated property. And we get in, we didn't have to do a whole lot of capex. The second property we bought was one that was half renovated, and the entire time I was looking for a full renovation, but I've done several of those before, but just with other partnerships. But looking back over the last year, I'm kind of glad that I did that. We've got a full, complete value add under contract right now, but with new company, new employees, I took the same approach, and that's kind of what solidified it in my mind. Where I am really glad that I bought this fully stabilized property, first. But anyway, you live and you learn, and that's one thing that I've learned. But anyway, but
This is kind of a tangent, but I think this is kind of my personal opinion. But I still, in this environment now that it's kind of like a basis play, values have come down, rates have gone up, there's distress, especially in Texas. This is not the time to do a deep value add, at least in Texas. That's just kind of my personal opinion, because a lot of people still want to do that value
yeah.
add. We just bid on a property last night that is not a deep value add. It only had 5 tours. And it's big
Mhm.
property and it's a beautiful property, but everyone wants that value add. So I like deals that don't have a lot of competition.
Mhm.
And I think when the market kind of starts ripping again, doing those deep value adds are great because you can kind of keep flipping them. People are flipping
Mhm.
them every year, 18
Yeah.
months, right? So that's kind of what we focus on, is kind of like the management play that worked at our Waco property, at least through this downturn until we start
Yeah.
ripping again in the market.
Yeah. Looking at the market right now, the real true value adds, these are properties that haven't been renovated in 10 or 15 years. Most of those are on long-term fixed rate debt, and
Mhm.
so, most of those are in positions where, the market has declined. And so a lot of owners of those properties are just like, we're good. We're going to wait until this storm blows over and then we're going to put it on the market. So I honestly haven't seen a whole lot of value adds on the market at all. And the ones that I have seen have had a really good reason. Like there was one we put an offer on and didn't get. This is probably the best deal I've seen in the last, 18 months. It was a married couple that owned the property. They were going through a divorce and they were selling, so it was like a 60-unit property. But the ones that you do see on the market, there's a really good reason why it's on the market. But yeah, I'd love to see more value adds come out.
It's coming. It's coming.
Coming.
We've been
Yes,
waiting for 2 years, but it's coming.
it's
It is on
coming.
the way.
It's coming. So let's progress from there. First deal done, everything else. How did everything progress from there? How did you, get next deals done, and what size were next deals, all that fun stuff. Tell us how things went from there.
Yeah. So after that deal, we actually tried to sell that deal 3 months after we bought it because values doubled in Waco. So we bought it for 61 a door and we saw stuff selling for 120 a door. Like, let's try to sell because we heard the Fed was going to raise interest rates, and they did, but they raised it an amount that no one expected, right? So it took a while. We ended up selling that. So we were kind of on pause. I did a few deals in Virginia with some partners in Virginia, and those were loan assumptions, fixed rate debt, no floating rate debt. And I did some RV parks, right, and helped my managing partner there. We were kind of on pause. Right now, we have 3 deals we're about to get under contract: a multifamily deal
Nice.
and 2 smaller industrial deals, because that's what I used to do
Yeah.
with that job in California. So really, we were kind of on pause until kind of recently. And part of that was just kind of waiting for things to stabilize. And things still are not stable. Rates are not stabilized. There's still a lot of volatility. Through my connections kind of at previous jobs, right now, I have 3 large capital partners that we're bidding on deals with, which is good because it's hard to close deals right now. It's hard to raise capital through friends and family. Friends and family have been burned and investing in some LP deals where they're getting capital calls, they're not paying distributions, etc. So yeah, so that's kind of what we're looking at right now. We think 2025 is going to be a really big year and growth year for our company.
Yeah, I'm hoping the same thing. I'm looking at the signs, Fed meets next week, and I mean by the time this podcast airs, the Fed decision is going to be done and out. But I'm hoping the same thing. We've been struggling to raise money like everybody else, but we've been able to do it. Raised 10 million in the last year or so. But
Nice.
anyway, it's been a struggle though. I mean, oh my goodness. But yeah, I think next year I'm in the same opinion. I think things are going to open up. Raising money is going to be a little bit easier. Finding deals is going to be a little easier, and it's not going to be the same as it was in 2020, 2021. But I think things are going to loosen up a little bit. So
agreed.
yeah. So cool. So what's your focus today, and what are you looking to do?
So we're looking at multifamily, C class, B class, and A class. I love C class right now because most people are scared of C class. There's like a flight to quality. So when everyone is fearful, I'm going to kind of rush in. So I got 2 capital pools looking at the C class stuff. I got a family office looking at A. A is much easier to manage, right, than the C class. So we're looking at all 3 properties types. And then because there was kind of like a pause on multifamily, we started looking at some industrial stuff. So we get these 2 industrial deals about to go into contract. That might have been a shiny object, entrepreneurial shiny object, but they're pretty good deals. But really just focus on multifamily and just kind of growing that. We talked about it before off camera, but kind of making my first hire in 2025. Really excited about that. Had this rolling internship program, kind of analytic capabilities, pretty programmatic process. So yeah, we're really excited about it.
So curious on the first hire. What's your plan? What is your first hire going to be?
Yeah, so I mentioned it before. My focus has been asset management throughout my career.
Right.
So it's going to be an asset management acquisitions person, but they need to have 3 to 5 years of acquisition experience.
Okay.
So I've been in commercial real estate for a long time, but you can always learn things. So I want to hire a somewhat experienced person that I can learn from. Someone from some firm, maybe they have some sort of secret sauce and kind of underwriting and how they do it, and they can kind of bring that in and kind of teach me something.
Now, how did you decide, I mean, when you look at all the roles in multifamily, you said acquisitions and asset management. I mean, what drove you to pick that type of person to hire?
So my secret or my superpower is relentlessness, right? So the capital raising piece, I kind of learned that I'm pretty good at the capital raising piece and building relationships. So I want to maintain focus on that and basically have that acquisitions, asset management piece, some of the detail level stuff, kind of overseeing the interns, analysts, underwriting deals, kind of keep that machine running, basically.
Okay, awesome. All right, here another question I wanted to ask about that is, why hire instead of partner? What's your mindset across that one?
Yeah, no, that's a good question. I'm part of another mastermind, and I saw this guy post in our Facebook group, like I paid myself for the first time in 6 or 7 years. Took him this long,
Yeah.
self-storage. And he's like, look, I've had other partners before, and sometimes we just didn't seem to eye to eye. So I just ended up kind of hiring people. And I was like, I just never thought about it that way. Like, I guess I had a lot of people kind of approach me like, hey, I would be a capital raiser, all this kind of other stuff. But I am kind of a control freak. So I think that's just kind of a better option. And we talked about it too, like, eventually that person could eventually scale to get partnership equity if they prove themselves over time. But right out of the gate, our financial situation, things like that, just not necessary to kind of bolt on other
Yeah.
partners,
Yeah.
and just like the control.
Yeah. And I was leaving a company and, or had already left a company that I founded. There's three partners besides me. So, it's, a lot of times we were deadlocked on, 2 to 2 on, which direction we wanted to go, and, stalemates a lot. But, when I left that company, part of, I kind of had a bad taste in my mouth with that partnership. I mean, just because, it was very inefficient, because we got deadlocked on a lot of things, we didn't progress and we didn't move forward. Like, we all wanted to move forward. We were all just pulling different directions. And so, yeah, when I left that partnership, I wasn't excited to jump into a new one again. And speaking of masterminds, somebody that I look to as a mentor suggested that I hire somebody. He's like, don't find a partner again, just go hire somebody to do the jobs that you need done, that you
Yep.
don't want to do. But and so that's what I've done. And just like you said, I look at the new hires as a path to partnership. But it does keep decision-making authority, with you if you hire somebody, which is awesome. You need to delegate as much as possible, of course, but
It's good to hear that
sucks
it's
for
working
you.
well for you.
Yeah, it does. It's worked well for me so far. I think turnover is kind of an issue, so I've hired, hold on, 1, 2, 3, 4, 5 people, and one of them ended up not being a good match, and we kind of mutually parted. And one of them, hired him for one job, and just how things evolved, that job changed, and he ended up not being the best match for the new job. And same thing, we kind of mutually parted. I had one guy that got poached by a big company. We're a small startup. He got poached by a big company, and so I lost him. And
Good
um,
validation for you and what you're doing, right?
yeah, and it kind of sucks because I trained him. I put him through a couple of courses, and so when I brought him on, I found a couple guys that were doing specific underwriting courses. And so I spent a lot of money up front on him. He stayed for about a year, but yeah, he got picked up by a larger firm to be, one of the in their acquisitions department. So I basically, helped that company by training one of their employees. But yeah, so there's challenges to it that you may not recognize up front. I think the employee retention part, is difficult. It's something I haven't quite figured out yet. But one thing that I have figured out is, if you're a small company, you need a builder. You need somebody who wants to come in and build, as opposed to somebody with an employee W-2 mindset, and that's looking back at it, the hires that didn't work out, they weren't as entrepreneurial. They wanted to be told what to do. They wanted, every day to be the same type stuff. And it's totally not like that when you're starting and growing a new company. Uh, anyway, that's my take on it. So you got to find builders, and then a couple of years from now, you can bring in regular employees. But look for people who want to build.
Makes
All
sense.
that's my 2 cents. But
We would talk about this in my last W-2 because I was a
uh-huh.
partner at that firm, GP equity in the funds, not like all the other partners, right? There's different
Mhm.
levels. It was the same thing. We all kind of talked to the senior leadership team. You have to come in with a kind of an ownership partnership mindset. So that entrepreneurial mindset, like you said, but also if there's a path to partnership, they have to be in the role and think like a partner before they are a partner, right?
Exactly.
That's that you need that mindset.
Absolutely.
Yeah.
Yeah. And like, if you're finding the builders, 2 examples. One guy that I have right now, if something needs to get done, he does it. He doesn't wait. One of my previous employees, just kind of quick example, we had a lunch where we invited a bunch of investors, and We positioned the guys from my company throughout the table so that everybody was within arm's length of somebody from Streamline Capital, right?
Right.
And after the lunch, fancy steakhouse cost me a ton of money. But after the lunch, he comes up to me and says, "Who is that guy next to me?" And I'm just like, "What do you
No, that
mean,
was
who is that guy next?"
you didn't do your job.
Yeah, exactly. It's like, "Oh, well, I just never got around to asking him." It's just one of those, you want people who take the action and aren't just sitting back, yeah, who aren't just sitting back. And that's kind of like one of the things that I've learned. And so I'm looking for, I would rather have the people that make mistakes by doing than the people who never make a mistake might do. Yeah.
That's the entrepreneurial mindset that really kind of, when I came from the W-2 mindset, it was always political. It's like, oh yeah, I don't want to show that I made a mistake. I'm afraid. It's
Yeah.
like you just want to make as many mistakes as possible and learn and be okay with it. And
And make
eventually
it
you
as
just, as an
fast as
entrepreneur, you
possible.
just, yeah,
Yeah.
exactly. Because that's how you learn and scale fast.
Yeah. One of my kids is deathly afraid of making mistakes. And so, something that I mentioned yesterday here in the house is if you're not making mistakes, you're not trying hard enough. And
Yeah.
that's what I started telling the kids that don't want to make mistakes is, hey, you're not trying hard enough. You need to be making the mistakes. It's
Mhm.
part of learning, part of growing. But how about this? What's next for you that we haven't already discussed?
So yeah, scaling the business. I run a meetup in DFW. It's one of the biggest ones in DFW. Our next event is in November 14th. It's called Boots and Beers. It's going to be a kind of country themed event. We're going to have axe throwing, mechanical bull
Nice.
riding. It's a nonprofit event for air recovery. They're an amazing nonprofit. They've been helping people in the mountains of North Carolina, saving people. They saved an 11-year-old baby or 11-day-old baby from that area. So that's super exciting. But we do the meetup every month, usually
Mm-hmm.
the third Thursday of the month. So if you're in DFW, come by. It's super awesome. I'd love to kind of give back because it's really a kind of a giving back opportunity because there's a lot of new people that are doing single family, want to learn about multifamily, all this other stuff. So feel free to reach out to me. You'll have my contact information. And if you're just generally want to know about real estate or I love helping people, so reach out to me. I'm open. You can book a meeting with me.
Well, it sounds very Texas to me. I've only spent a little time in Texas, but axe throwing and bull riding. I mean, sounds like a good time. Whether you do anything real estate related or not, still sounds fun. But well, awesome. So next question, if you had to give advice to somebody who is brand new, just starting out in the multifamily syndication business, what would that advice be?
Listen to podcasts,
Mm.
educate yourself,
Okay.
and join a mastermind. Like
Awesome.
I had a lot of experience in real estate, and I still joined a mastermind, and my real estate business took off. So
Hmm.
don't be humble because
Yeah.
I had a little hubris and partner with people and build your network.
Yeah. And you mentioned coaching earlier, and this may be a self-serving question, but what
Mhm.
you mentioned masterminds, but what role did coaching have in your journey?
So join the mastermind,
Mm.
get feedback on our underwriting basically before we submit an offer. And we were making mistakes at the beginning, right? It was kind of all of
Mhm.
us. Usually it's like the people that come into the mastermind similar time and kind of start partnering together, right? It's kind of like
Mhm.
a class. So yeah, I mean, they saved us hundreds of thousands of dollars of like not submitting an offer or lowering an offer, whatever it is, and kind of fixing our
Mhm.
mistake. So
Yeah.
well worth whatever the cost is.
Mhm.
It helps grow your business.
Awesome. Awesome. And last question, how can listeners learn more about you?
Yeah, so you can email me at nick@leonerepartners.com, or you can go to our
Okay.
website, leonerepartners.com, or you can text me or call me at 214-888-6736.
Awesome. And we'll put all of that in the show notes. So if you're in the Dallas Fort Worth area, head over to his meetup, get some axe throwing in, help some people in North Carolina, ride some bulls. I've never done that before. Does not sound fun to me. Uh, Axe throwing I've done quite a bit, but that used to be a childhood thing on our campouts. We'd always throw axes. But
Nice.
yeah, and then anything else, reach out to him. We'll have all that information in the show notes for you guys. But Nick, thanks for coming on the show. Very much appreciate your time.
Thank you so much for having me on, Brian. It was great
Awesome.
having you.